and welcome to Tech Latest from Nikkei Asia, where we bring you fresh updates from the Asian tech sector. I'm your host, Shotaro Tani, and in this week's episode, we dive into the struggles Singapore's digital-only banks are facing 5 years after the city-state opened up its financial sector to these players. With me to discuss the topic is Dylan Loh, our Singapore correspondent. Dylan, welcome to the show.
Nice to be here.
So Dylan, who are the main digital bank players in Singapore and who are they backed by, if any?
Well, there are two segments of digital banks that the financial regulator gave licenses to a couple of years ago. You have wholesale banks who would be able to service businesses only. So, for example, small and medium enterprises and corporates. And then you have digital full banks, which are those that can service consumers like you and I, as well as businesses and corporates. Within the realm of the banks that can service all of them, it would be two major players. That would be the bank called GXS, which is owned by Grab, the super app provider, and also owned by Singtel, which is the mobile network telecoms operator in Singapore. So it's a joint venture between the both of them. The second digital bank is owned by C, whom, as some of you know, might operate the e-commerce platform Shopee, as well as Garena, the gaming segment. And then you have, these are the two main digital banks that have been given licenses by the financial regulator. There is a third digital bank called Trust Bank. They don't need a digital banking license because they are owned by Standard Chartered, and Standard Chartered already has a full bank license. So they're riding on the permits that their parent has. And these are basically the three players that you have serving consumers mainly in Singapore, as well as corporates and businesses.
Got it. In your piece about this topic, you wrote about how the three combined have racked up 358 million Singapore dollars in losses in 2024. That's a huge loss. Why are they still making a hefty loss 5 years after they came on board?
Well, if you think about it, they are kind of startup banks, right? And and you have extensively covered the venture capital scene, Shotaro. And as we know, startups in their first few years of operations are basically cash burning machines. They raise money from venture capital and use that money to chase growth, right? Increase market share at the expense of sometimes their bottom line, which means they'll be racking up losses in the first few years. So that's basically what's happening to them right now. They're scaling, they're trying to scale up or attempting to scale up, but they are putting a lot of capital into the operations of trying to manage their size and growth and market share to the extent they aren't really able to turn a profit yet. Unlike, for example, the traditional lenders, traditional legacy financial institutions, they have been here for decades, right? So that's essentially what's happening to the digital banks right now, is spending a lot of money trying to ramp up operations, acquire customers, but still not making profits.
And do they have a timeline as to when they will turn profitable?
Yeah, one of them has. I spoke to the chief executive officer of GXS, which is the digital bank owned by Grab and Singtel. And they expect to break even by the last quarter of 2026 and then to be profitable in the full year of 2027. Now, I asked the same question to the chief executives of Mari Bank and Trust Bank, and neither of them wanted to give me a firm answer as to when they would break even or make a profit. So as you know, they can be quite non-committal to an exact timeline in terms of giving guidance as to when to turn profits, because perhaps some of the executives inside the digital banks are not entirely sure themselves if they can meet the internal targets that they've set out potentially. But at least GXS thinks that they can turn a profit in 2027. So out of the three, they are the ones who have the clearest timeline set in terms of when they can break even.
Gotcha. Obviously, these guys are backed by prominent companies. GXX Bank and Mari Bank in particular are backed by the tech super companies in the region. Do they offer to the customers what conventional banks do not? I mean, when I was covering the Southeast Asian tech scene, I remember, and they were coming up with these digital banks' strategies, and they were saying like Grab was saying like we could potentially tie the financial digital bank services to the ride hailing or the food delivery or other stuff, and potentially offer better services to the customers than conventional banks can. But is that the case? What are they offering to customers that conventional banks aren't offering?
You are absolutely right. And I'll give you a couple of statistics as to what you alluded to just now in terms of tying into the wider tech ecosystem that these tech players have. So you know that Grab is a super app, right? They have everything from ride hailing to food delivery and whatnot. So financial services, you can say, is perhaps another pillar of the whole suite of digital services that a consumer like you or I can expect on a one-stop shop app where you can access everything from shopping to getting a ride from a place to another. So that's the value proposition, at least, that they want consumers to think. And if you look at the numbers, what the GXS CEO told me was that 80% of the existing digital banking customers were already account holders of Grab and Singtel as well. So you can see how important it is in terms of the integration strategy of financial services into the wider tech ecosystem that they have is as a tactic for these banks to cover ground in acquiring customers. This is something that perhaps the traditional banks aren't able to do because a normal traditional bank in Singapore, like if you think about DBS, UOB, or OCBC, they don't operate super apps, right? So you cannot book a ride or a food delivery on the DBS app, which is something that the digital banking apps are able to do, for example. So this is the value proposition they have. But as we can see, that promise doesn't seem to be working out in their favor because in terms of the size of customers that they have, seems to be still quite a bit smaller than the customers that the traditional banks have.
Well, why do you think that is?
Well, as you see, Singapore, for example, is a very highly banked society. Estimates range from above 98% of consumers in Singapore already have banking accounts. So you have pretty much a 6 million population, and all of them virtually already have bank accounts. You want to convince them to take on new banking accounts with these digital players who are fresh onto the scene and do not have the same track record that the legacy lenders have. So that itself, some people say, might be a hurdle as well already. Despite the promise of having financial services integrated with whether food delivery or e-commerce or ride-hailing, you can see that maybe some people are not too convinced by the value proposition. So in a certain sense, some of the digital banking players kind of are struggling to convince consumers that there is a viable proposition in taking their services up.
I mean, would you say the situation would be a bit different if they branch out into other countries, say like Indonesia? Because one thing when I was in Indonesia, a lot of the digital banks were saying was this is a country that is very underbanked, and that's where we can really target. And it's a segment that conventional banks can't really target, and that was one of the segments that they were aiming for. But are these Singaporean digital banks, are they branching out into overseas market to get that unbanked population across Southeast Asia?
Absolutely. That's one of the things that they're doing. So GXS, for example, they launched just about 2 years ago their operations in Malaysia. So if you think about it, Malaysia has a much larger population than Singapore, right? So the potential market size is a lot bigger, right? So and the numbers show in Singapore they have less than 1 million customers, and they launched earlier in Singapore. They were the first. Singapore was the first market for GXS. But in Malaysia, they've launched in about a year or so, they've accumulated more than 1 million customers. So you see the vast difference in terms of what a population size can do, and in terms of where economies where you have a much larger group of people and potentially a much larger proportion of them are unbanked, are able to help in terms of being an external wing of income generation for these digital banks. So certainly the regional markets are a target for banks like Mari Bank and GXS. But when I ask the CEOs, hey, look, are there any new markets in Southeast Asia that you would like to target or eye in future? And they were a little bit conservative about that, preferring to put their focus on, look, we want to get our operations in Singapore right first. we're expanding our suite of financial services. And once we have a baseline steady state, and then we can think about the opportunities elsewhere. Besides, GXS, for example, opening another branch of operations in Malaysia, you have alternative strategies such as taking a stake in another bank, for example, whether it's in Philippines or Indonesia, and have that bank act as an affiliate of the Singapore group, right? So that's another way in which they can expand their reach into other markets. But yes, it is true that the overseas markets in Southeast Asia, ASEAN region as a whole, is a target for the digital banks. However, from my sense, I think they want to get into a steady state of operations first, where they can at least show that they are making some money before they are a bit more aggressive on expansion.
Gotcha. And what are the conventional banks doing? Are they also moving into digital banking as well, or are they just coming up with apps that act like digital banking but not really offering the same kind of digital experience that these digital banks are offering?
Yeah, if you ask an executive at any of the main lenders, traditional lenders in Singapore, whether it's from DBS or OCBC or UOB, which are the three largest banks by assets in Southeast Asia, they're all based in Singapore. They will tell you that, hey, look, we know the digital banks have rolled out their services, but before they even launch, we have already digitalized our services, right? We have banking apps where people can do financial transactions, make investments, put their money into fixed deposits without even having to visit a physical branch and spend time in a queue and wait for their number to be called before they meet a person face to face, right? So this is something that they are already boasting about even before the digital banks have really launched. And indeed, they are putting millions of dollars into further digitalizing their services, whether in terms of improving the app interfaces or investing into artificial intelligence. For example, DBS is quite bullish on making AI a tenet of their banking services. For example, if there's a consumer that wants to grow their money, they can have an AI agent or software be able to make predictive analysis on their investment portfolios and give a certain kind of direction as to where they should go. So for sure, the traditional banks themselves are encroaching on the primary turfs of the digital banks. So there's very fierce competition in this regard. But as I spoke about just now for a fair bit, one thing that the traditional lenders cannot do is to claim that to have other non-banking services on their apps, for example, ride-hailing or food delivery or e-commerce, things like that. This is something that the digital bank like Mari Bank is able to do, and GXS is able to do as well, because they can integrate their financial services into a wider tech ecosystem or the other verticals of services that they offer on their own super apps.
Well, we'll see how they perform in the coming years. Thank you, Dylan, for your time.
Thank you, Shotaro. It's lovely to be here.
That's it for this week's episode. You can read Dylan's deep dive into Singapore's digital banks as well as the latest Asian tech news on our website, asia.nikkei.com. You can also subscribe to our weekly Tech Asia newsletter, which will be delivered to your inbox every Thursday. Thank you for tuning in and see you in our next episode.